So today we will cover the basics of trading, how to analyze charts correctly. It doesn't matter if you trade crypto, futures, forex, stocks. The concept is all the same for all of these categories. So we cover the basic information, basic fundamentals, and yeah, let's get started with our first example. So we're trading on a lower 5-minute time frame, so the first thing we have to do is to go on a higher time frame to mark the supply and demand zones. That is either supply and demand, or it's also called support and resistance. So our support would be down here. Let's make it a little bit bigger. And our resistance, the resistance of selling pressure, would be up here. So in the support zone there's a lot of buying pressure, a lot of buyers coming in, and in the resistance it is the opposite. There's a big selling pressure. You can even see the candles didn't close as high as they went. They jumped up but closed way lower. That shows the lack of buying pressure, and one of the factors, one of the indicators that the market will likely go down, and change the direction and go in a downtrend. So now let's get back to our main time frame, which is the 5-minute time frame. The first thing we have to do is to find the trend in which our market is trading in. So here we can clearly see that the market is trading in a downtrend. You can draw trend lines to make it simpler for you to see. The market is trading in a clear downtrend. Here's our first touch point, second touch point, third, fourth touch points. So that's a clear downtrend. And here we can see that the market broke the downtrend. So once again, the candle has a very high stick below it, which means that there was not enough selling pressure and buyers took over, and then the small bullish candle is followed up by the extremely huge bullish candle, which shows a huge buying pressure, and the trend was broken. So now, in order to change the direction of the trend, we have to break this level right here, the previous high of the trend. So it broke the trend line, came back down, broke the previous high of the trend line, which means this is the change of correction. There's a change of correction happening, and it's continuing to move uptrend. So now, from a downtrend, it turned into an obvious uptrend with 3 clear touch points, creating new higher highs. Creating new higher highs and higher lows too. Here we have our second example. It's an XRP chart, but as I said before, it doesn't matter if it's crypto, forex, or stocks, futures, whatever. The concept is still the same. So once again, we go to the higher time frame, zoom in a little bit. You can clearly see the clear resistance zone where there is a lot of selling pressure, and we can also clearly see the support zone where a lot of buying pressure is seen. Obviously it was broken before, but if the support zone was broken, it doesn't mean that the support zone is right there. The support zone or the resistance zone is where you can mark the most touch points in a vertical area of the market. So we have some consolidation here. Here's one touch point, the second touch point, third touch point, fourth, fifth touch point. So this is a clear support zone. In the resistance zone, we had 1, 2, 3 touch points, so it is valid also. Now let's go to the lower time frame and see what we have here. First of all, we're looking for the trend, right? So we have to identify the trend of the market, and it is also quite clear that it is a downtrend. So we can draw a trend line to make it seem simpler for you. So we're in a downtrend. 1, 2, 3, 4 touch points. We can also mark another trend line, other downtrend, which was broken, but our main downtrend wasn't. So this would go into the lower time frame categories. This downtrend is not as strong as this one, because this one has more main touch points connected, and this one has a few also. So what we can see from here, the market once again, we see buying pressure, and then there was a lot of selling pressure, but it wasn't enough selling pressure, and the buyers took over because the candle still closed on the buying side, so it is a bullish candle, and the next bullish candle that breaks the trend is once again way larger than the other ones in comparison. So here the trend is broken. For it to be a valid change of the trend, it has to break the trend's previous high. So it's this level, and it was already broken. Then the market has always came down a little bit, consolidated, and created a new high, which created a small uptrend for us, which had 1, 2, we could say 2 touch points, clear touch points, and then it break out again. Although, as I said, this should go into the lower time frame analysis, and it is not as strong as this downtrend right here. So yeah, I think we'll end the video with these 2 examples. I hope you got a clear understanding of what supply and demand zones are, also how to identify the trends, the change of trends, change of structure, and how to know if the trends or supply or demand zones are valid. And yeah, these are the basics. I hope you enjoyed the video, and I'll see you next time. Bye.